Hello and welcome back. Let's go across to a market guest. Rohit Agarwal from Kotak Life is now with us. Rohit, thanks so much for taking out time for us. Let's first start by, the broader market participation that we have seen in the market. Do you think that broader markets would continue to do well? We are at a lifetime high, but we have seen that whenever broader markets hit a lifetime high, earnings tend to follow, and then probably, you tend to see a further broad-based rally. What is your view on the broader market space?
Hi, good afternoon. It would be an understatement if I said that the broader market have been very resilient. Why I say so is that we have seen what's happened in India, where we have had this COVID second wave, versus some of the other developed countries in the world where they have actually started to open up. One of the reasons that the broader market has continued to do well is precisely that, where people have extrapolated as to what's happening in the other developed economies of the US, the UK, and some other economies which have opened up, where vaccination has reached a particular percentage and people have started venturing out. In India, particularly, we have seen that now the cases have started to drop. And now we are also expecting that vaccine supply should increase. And also at the same time, vaccination pace, which has actually slowed down, should pick up pace from next month onwards. In that backdrop, the market being forward looking, the broader market has not corrected. But bear in mind, Indian markets are not the best performing markets currently. They have actually underperformed for the right reasons because we have seen a second wave. So going forward, we will again likely, in my opinion, take a clue from what's happening around the globe, where although there is recovery, although things have opened up, there are a lot of other issues which have cropped up. Sometimes the issues related to bond yields, then there is an issue related to inflation, and such other issues which have cropped up day before yesterday. And yesterday we saw a lot of turbulence in the crypto market. All of these are interconnected. So I think the Indian markets, till our economy goes or comes back on track, will kind of follow the global trends. And the global trends currently are just about there, where there are some issues on the horizon, but they're not falling. And hence, you believe that in India also, with a lag of 3 to 6 months, economic pace, economic recovery, and earnings will all follow, and hence we are not falling.
How would you position yourself in banks like this? Because that's probably the most vulnerable space. Whether NPAs will come, whether NPAs will not come. Yes, there are job losses that are happening. At least salary cuts or income is being impacted. So how do you look at that particular side of the market?
Well, out of the whole market, if you look at the banks as a space, especially the private ones and maybe a few large PSUs as well, one good thing that has happened is that after COVID first phase, all of these banks are either well capitalized or well provided in terms of COVID provisions. Most of the large private banks carry a provision of 1 to 2% as COVID provisions on their balance sheets. What that means is the issues which are likely to crop up in COVID 2, which in my opinion are likely to be way lesser than COVID 1, which is more related to quarter 1, which is the ongoing quarter, the issue with the repayments, the issue with NPAs should be lesser. Currently, in my opinion, the market participants are assuming that out of the first quarter, which is April to June, you will lose productivity of about 1 month because the lockdowns are not as severe, manufacturing continues, government infrastructure projects continue, and hence the kind of loss on the GDP or productivity that we had in the last phase is unlikely in this phase. And hence we believe on the economy and also on bank earnings, because the impact on the economy is lesser, we also believe that the NPAs and the restructuring needed by the banks this time around will be lesser. And as I said, they are already carrying COVID provisions of 1 to 2%. So I think they should be able to navigate through this unless something else comes on the horizon, which has not yet been penciled in by the market participants. And from a medium term perspective, I think banks can be a very good cyclical trade, where actually, if you look on valuations as well, they are not trading at ridiculous valuations. And as and when recovery starts to happen, there will be a lot of operating leverage in terms of credit cost, which will drop sharply, and hence earnings upgrades is possible.
All right. Hi Rohit, this is Mubina as well joining. And in your first answer, you mentioned that how bond yields, etc., turned out to be a problem for global economies. India, of course, like you said, will largely follow that suit. Now, my question is that so far for Q4, India Inc. seems to be doing well, right? Revenues have grown well, bottom line has grown well. But for at least the first half of the next fiscal, how much of a threat are is inflation, because we've been seeing commodity prices rise throughout, right? So to what extent do you think India Inc.'s profitability will be hurt on account of this, and which are the sectors most vulnerable to this?
Well, in terms of economic forecasting and earnings forecasting, the job is to make astrology look respectable. What I mean to say is there is absolutely no one knows what is the exact impact of all of these on the earnings. What we know is over the year, if you look at FY22, the market participants are expecting an earnings growth of about 30 odd percent over FY21, which was itself close to 15 odd percent. Now, in my opinion, these earnings of 30% are likely to be cut. How much is the cut going to be? Now, there the challenge lies as to how fast will India reopen, how fast will growth come back. Now, that's a question or a conjecture where, if you ask me, I believe from June onwards, we'll start seeing some kind of activity on some states or cities where the cases have dropped, going or starting through partial reopening. Whereas some cities which went into lockdown later and where the cases are still high will probably open July or August onwards. What also needs to be mapped is the pace of vaccination. Because this time around, what may happen is that the governments may be a little reluctant to open up till vaccination picks up pace because they have seen what's happened in the first phase. If I put all of that together, I still stick to my earlier, what I told you, that I believe that we may lose 1 month of productivity. So on the GDP side, what I believe is if the economists were projecting 10 to 12% GDP growth this year, they will have to make a cut of anywhere between 100 to 200 basis points. In the same way, on the earnings, where the estimates were about 30 odd percent, they will be maybe closer to more like 20 to 25%. However, if the pace of recovery is good, and this time around, I believe the pace of recovery will be very different from the first phase. In the first phase, on the recovery side, people consume goods. In the second phase, when the recovery starts, I think people will want to consume services. That's because most of the people by that time would have been vaccinated. This is the same thing which is happening in the US, where travel is coming back, where people want to go out, people want to meet, people want to travel, people want to spend. So from eating, you want to drink. All of these changes versus the recovery in the last phase versus this phase is likely to happen. And if the pace of recovery again surprises this time as last time, I think FY23 or the end of FY22, when the festive season is there, can again surprise us on the upside. And hence, markets can still continue to do well. And the earnings in FY23 can be anywhere between 800 to 850 rupees of EPS on the Nifty itself.
Okay, all right. Well, Rohit, with that, we let you go. Thanks so much for joining us today on ET Now, and sharing with us your take on the markets and a little bit of crystal ball reading as well. Okay, well, with that, we'll take a short break on the show with the news that the markets is powering ahead. We are sustaining at the high point of the day. Be right back.